Welcome back to the deep dive. Today, we're really jumping into something fascinating, something that's buzzing in the crypto space. We're looking at how you can use AI, specifically Grok 4, to build, well, hopefully powerful crypto trading strategies. We've dug through some great sources for this deep dive, focusing on this one big idea. Can AI actually take any indicator from TradingView and turn it into a profitable bot? And here's the really interesting part. Can you do it without knowing any coding at all? That's what we're trying to figure out today.
Yeah, it's definitely the right time to talk about this. Crypto markets, they're just evolving so fast. They're becoming incredibly complex, tons of data flying around. Honestly, trying to sort through all that manually, looking for good strategies, it's almost impossible, or at least really overwhelming.
Right.
So this is where AI potentially offers, a major shortcut.
Yeah.
It promises efficiency, maybe some deeper insights, helps you make sense of all that noise.
Exactly. And to see how that works, let's talk about the AI they used here, Grok 4. Our sources mentioned the pricing. There's like a basic package, $30 a month, and then a much pricier one, $300 a month. The main difference seems to be this. The expensive one gives you multiple agents to build a strategy, while the cheaper Grok expert tier is more like one agent that searches the web for ideas for you.
And what's really telling is that when they first tried just, asking Grok 4 broadly, like find me a profitable strategy, well, didn't really work out. No specific rules, no structure given to the AI.
Oh, okay.
And that's a key point, right? It kind of bursts that bubble of thinking there's some magic AI button you just press. It really shows that even with powerful AI, you need a plan. You need to be specific.
That really pushes back against the whole AI will do everything idea, doesn't it? So even with Grok 4, it's still kind of garbage in, garbage out if you don't give it a solid framework.
Precisely. It shows AI is amazing at amplifying what we intend, but it's not replacing the need for strategy, especially in something as tricky as trading. AI is great at processing, at generating code based on instructions, but the actual strategy, the rules, that still has to come from us, which is why the next piece, the NFX method they used, was so important.
Right, makes sense. So knowing you need that structure, where do these strategies actually get built and tested? That brings us to TradingView, which is honestly an amazing resource for charts and indicators. The sources pointed out its huge library of open source scripts. And the best part, so many are free.
Yeah, it's massive.
And you don't need to be a coder. TradingView has this Pine editor. It's pretty user-friendly. You can just paste code in, or even better, get AI like Grok or ChatGPT or Claude to actually write the strategy code for you.
And a small technical detail, but important, they specifically chose PineScript version 5. Apparently most AI models, the LLMs, they're just more trained on versions 4 and 5 compared to the newer version 6.
Oh, interesting. Okay.
So you tend to get better code, fewer mistakes, using version 5. Plus, TradingView has a simple button anyway to update PineScript 5 code to version 6 if you need it. So kind of the best of both worlds.
Gotcha. So structure is key. The specific method used in this deep dive was the NNFX method, no-nonsense Forex. Now, it started in Forex, obviously, but its rules-based system works well in other markets too, like crypto. It basically gives the AI that structured framework we were just talking about, essential, it seems.
Exactly. NNFX, as they apply to here, breaks things down very clearly. You need a baseline indicator, think like a moving average, just to tell you the main trend direction, long or short. Then you layer on 2 confirmation indicators. These give you the actual entry signals confirming the trend, plus a volume or volatility indicator. This is crucial to help you stay out of messy, choppy markets where strategies often fail.
Right, avoid the noise.
Yep. And for risk management, you use an ATR band, average true range, to set your stop losses dynamically. And a risk-to-reward ratio helps decide where to take profits. It's important to note, these are mostly trend-following strategies, trying to catch and ride those bigger market moves.
Okay, so with that NFX plan laid out, the prompt they gave Grok was super specific, something like, act like a PineScript developer, focus on PineScript 5, build strategies that fully follow the NFX rules, and turn these indicators into back-testable strategies. So, not just asking vaguely, but giving it a clear role and very detailed instructions.
Exactly. Role-playing plus specific constraints.
All right, let's walk through how they actually built it, step by step, starting with that baseline indicator. They use the JMA, the Jurek Moving Average. Now, this isn't your basic moving average. It's designed to be smoother, more responsive, less lag.
Right. Cuts down on false signals, hopefully.
Its job is simple. Green means look for longs if the price is above it. Red means look for shorts if the price is below. That's the main trend filter. You can apparently find this indicator code on a site called davidtech.com/indicators, or just search in TradingView. The process sounds easy. Click the curly brackets on TradingView to see the code, copy it,
Just copy the source code.
and then feed that code to Grok as part of building the strategy.
And Grok's first attempt at coding the JMA baseline strategy was pretty quick. 105 seconds, apparently. The code looked decent, good indentation, even had comments explaining things, which is nice, but there was a common problem, something LLMs often miss. It didn't include an ATR, the average true range indicator.
Ah, the thing for stop losses.
Exactly. ATR measures volatility, how much the price typically moves. It's vital for setting sensible stop losses that adapt to the market. Fixed stops can be too tight or too loose, so that often needs you to add it manually or be really specific in your prompt to make sure the AI includes it.
Okay, so you get the code from Grok, paste it into TradingView's Pine editor, and maybe, you get an error message, which happens, right?
All the time, yeah.
The debugging step here sounds almost too simple. Just copy that error message from TradingView and paste it straight back into Grok.
And this is where the AI, Grok in this case, was really impressive. It apparently fixed the code in just 26 seconds.
Wow, 26 seconds.
Yeah, it shows how fast these things can be at troubleshooting when you give them that direct feedback, the specific error. It's like having a super fast coder sitting next to you ready to fix things instantly once you point out the problem.
Okay, so error fixed, JMA baseline strategy is running. The first backtest results, well, they weren't stellar, showed like 8,000 trades, drawdown was low at 3%, but the total profit was only 3.3%. So not great, but importantly, it was a working backtested strategy built by AI from an indicator.
A functional baseline, yeah.
Next up, adding the first confirmation indicator, they used one called trend aim. It sounds like it works similarly to the baseline green for longs, red for shorts, but acts as a confirmation signal. Same process. Copy the trend aim code, feed it to Grok to add to the existing JMA strategy.
Now, this step had a few little hiccups. Things like missing spaces in the code Grok generated, annoying little syntax things. But again, when prompted with the errors, Grok managed to fix them. And after adding trend aim and fixing those issues, the backtesting results did improve. It showed a 4% gain over just buying and holding Bitcoin, for example. And the strategy itself had 42% profitable trades.
Okay, getting a bit better.
And they also mentioned tweaking settings made a difference. Like switching from a trailing stop loss to a hard stop loss actually boosted profitability. A trailing stop moves up with your profit while a hard stop is fixed. So maybe for this crypto setup, a fixed exit was just cleaner, less prone to getting stopped out by volatility.
Interesting how small tweaks matter. Okay, so baseline, +1 confirmation. Then they added the second confirmation indicator. This one was called TDFI, Trend Direction Force Indicating Index. Sounds fancy. But its function is, again, simple. Another green for long, red for short confirmation. But the source notes that adding this one, Grok took a long while to think about things. Maybe it was getting more complex.
It seems so. Integrating the TDFI code led to more debugging. Issues like double F statements like logic errors, double plots appearing on the chart, and more of those missing spaces. But once they ironed all that out, the results took a significant jump.
Okay.
The backtest now showed 18% profit and loss. The max drawdown was still pretty low at 4.5%. It took 511 trades, win rate was 37%, and the profit factor hit 1.2, meaning it made $1.20 for every $1 risked, roughly. So definitely profitable overall. And visually, they said the equity curve, the graph of your profit over time, started looking a little bit better, smoother upward trend.
All right, 18% P&L, 4.5% drawdown. That's starting to look more respectable. Baseline, 2 confirmations. What was the final piece?
The volatility filter, to try and avoid those sideways, choppy market conditions.
Right, the market chop killer.
Exactly. They used an ADX plus moving average indicator. ADX, the average directional index, doesn't show direction. It measures the strength of the trend. The idea was only take trades if the trend is strong, ADX above 20, and stay out if the market is drifting sideways, ADX below 20. And they specifically added these ADX rules into the prompt for Grok.
Okay, makes sense. Filter out the low probability trades. So the final results after adding the ADX filter.
The final backtest showed 19% profit and loss. Max drawdown stayed at 4.5%, still 511 trades, 37% win rate. So the ADX didn't massively boost the P&L in this specific run, but it likely made the entries cleaner, filtering out some bad trades, in theory. But again, it's crucial to remember the main point here wasn't necessarily to build the world's best strategy. The goal was to show that AI, like Grok, could take these free TradingView indicators, follow a specific plan like NNFX, build the strategy code, debug it, and backtest it, all without the user needing to write Pine script themselves, just by providing clear instructions and copying and pasting code and errors.
Yeah, that 19% P&L, maybe not life-changing for a pro trader, but the process is what's really stunning here. It's like this democratization of strategy building, stuff that used to require serious coding skills, financial engineering know-how, now potentially accessible just through smart prompting and using these AI tools.
Definitely.
It really lowers the barrier to entry for experimenting with complex trading ideas. Anyone can now potentially test things out, and huge value in that free TradingView indicator library. It's like a giant sandbox waiting for AI to play in it.
It really makes you think, doesn't it? And this is a question for you, the listener, to ponder. We see how AI can take very specific instructions, understand a complex concept like a trading strategy framework, and turn it into working code really fast. So how could this same idea, using AI to quickly digest rules, translate concepts, and generate outputs, apply elsewhere? Where else might you want to rapidly get up to speed on something complex or even develop a new skill, bypassing some of the traditional learning hurdles? What other kinds of deep dives could AI help you take in your own work or learning? It opens up some really interesting possibilities.
It absolutely does. Thinking about AI as your personal knowledge co-pilot or skill accelerator, it's pretty mind-bending. Definitely something to chew on. Keep exploring, keep asking questions, and we'll catch you on the next deep dive.